Are you ready for a potential shakeup in the oil market? U.S. crude oil inventories are swelling at an alarming rate, even as domestic production hits unprecedented levels. This could mean lower prices at the pump, or a whole host of other economic consequences. Let's dive into the details and see what's really going on. According to the American Petroleum Institute, API, crude oil stockpiles in the United States experienced a substantial surge of 4.4 million barrels in the week ending November 14th. To put that in perspective, the previous week saw an increase of 1.3 million barrels. That's a significant jump, indicating a possible imbalance between supply and demand. Now, let's talk about the bigger picture. Oilprice.com's calculations based on API data reveal a net gain of 9.3 million barrels in U.S. crude oil inventories so far this year. This accumulation raises questions. Is demand slowing down? Are we producing more oil than we can use? What are the implications for global oil prices? Adding another layer to this complex situation, the Department of Energy, DOE, reported an increase of 500,000 barrels in the Strategic Petroleum Reserve, SPR, bringing the total to 410.9 million barrels as of November 14th. This replenishment effort aims to rebuild the nation's oil reserves, which had been drawn down during the current administration. But here's where it gets controversial. Some argue that filling the SPR while commercial inventories are also rising is like pouring water into a glass that's already overflowing. Is this the right strategy, or could it exacerbate the oversupply issue? On the production front, U.S. oil output continues its relentless climb. During the week of November 7th, daily production reached a new record of 13.862 million barrels per day, BPD, according to the Energy Information Administration, EIA. That's a staggering 299,000 BPD increase since the beginning of the year. This remarkable growth is a testament to the efficiency of U.S. shale production, but also a potential contributor to the rising inventory levels. And this is the part most people miss. Increased production without a corresponding increase in demand inevitably leads to storage challenges and downward pressure on prices. Despite the bearish inventory data, both Brent Crude and West Texas Intermediate, WTI, prices saw gains on the day. At 3:53 p.m. Eastern Time, Brent Crude was up 71 cents, plus 1.11%, at $64.91 per barrel, while WTI rose 86 cents, plus 1.44%, to $60.77, a $2.30 per barrel increase week over week. This seemingly contradictory price action could be due to a number of factors, including geopolitical tensions, short covering by traders, or expectations of future demand growth. Let's not forget about gasoline and distillate inventories. Gasoline stockpiles edged up by 1.5 million barrels in the week ending November 14th, reversing the previous week's decline of 1.4 million barrels. However, gasoline inventories remain 4% below the 5-year average for this time of year, according to the EIA. Distillate inventories, which include diesel and heating oil, also increased by 600,000 barrels during the reporting period, following a 944,000 barrel build the week before. Notably, distillate inventories were already 8% below the 5-year average as of November 7th. These lower-than-average levels could lead to price spikes if demand unexpectedly surges during the winter months. Finally, Cushing inventory, the crucial storage hub for WTI crude futures, experienced a decrease of 800,000 barrels, following a smaller decline of 43,000 barrels in the previous week. A draw in Cushing inventories can sometimes signal increasing demand or logistical bottlenecks. So, what does all this mean for you? The rising crude oil inventories, coupled with record high production, create a complex and potentially volatile market environment. While the recent price gains may offer some short-term relief, the underlying fundamentals suggest that downward pressure on prices could persist. Will OPEC Plus production cuts be enough to offset the growing U.S. supply? Will demand rebound in the coming months? These are the critical questions that will determine the future direction of oil prices. What are your thoughts? Do you foresee lower prices at the pump, or do you believe geopolitical factors will keep prices elevated? Share your predictions and insights in the comments below.